Welcome to this week's 7X Investors Look Ahead. This is where we'll take a look at a currency pair, an index, or a commodity like gold or oil, and give you our outlooks of what we see coming this week. Before doing that, we like to share with you a little bit about 7X Investors. It's a platform where you can develop a free account and join our community. In that community, you can be able to have free trainings, which we hold every Wednesday. You can also gain knowledge from other traders that are in the 7X community or even in the other communities such as Alpha Trader or 7X Futures. As you attend the weekly trainings, you can be able to get a more in-depth understanding of what kind of trader you would like to become, whether it be in futures or in forex or CFDs. Once you decide what you'd like to do, we have specialized trainers which will go through step by step on how to become a proficient, profitable trader. We have Cordell Stevens in the Alpha Trader section, which deals with trading CFDs or currencies. And we have Dan Kelly in 7X Futures, which trades futures in the NASDAQ, the S&P, and gold. At the end of this video, we encourage you to click the link below, which will take you to our website, and you can set up that free account. Also, subscribe, like, and turn on notifications of the site so that you can get notified every time we release our week ahead video. Now let's take a look on what's ahead. Welcome everyone to this week's look ahead. This is for the week of 8/28/2023. We're going to first look at this chart by Bank of America. Now this shows the interaction between how banks inject liquidity versus what the NASDAQ 100 does. So we're looking at this chart here and we see that liquidity has been going out of the system. Now the name of the game is liquidity here, folks. If there's no liquidity, guess what? Asset prices go down. Well, we see that liquidity has been going down, but what has happened to asset prices? They've been going up, haven't they? So we see this pullback in the NASDAQ, which is what we're looking at here, the NASDAQ 100, and it's pulled back. What we expect to see now, because liquidity continues to drop for many different reasons, central banks pulling back, situations around the world where economies are contracting, like in China mainly, what we expect to see here now is we expect the NASDAQ to start really heading down, and it's already started to do that per our outlook last week, how we were looking for that to pull back up, and then we were looking for it to range some and roll on over, and it has done that. It is now setting up to push through the support zone, and that's what we're going to look at right here in this chart. So here it is, the NASDAQ, and we are looking at this right here. So we had this lift off the bottom of the channel. It pushed up, it came straight back down. It's holding right here. So you see it's holding right at this channel. What is the trade? The trade is this. If we break this channel, we are going to move down to the next level. And that next level is going to be right here, and I'm going to mark that for you. It's going to be right here in this area there. And if we hold this channel, then we are going to begin to push back up and break a new high. Those are our two options. Now with everything going on and banks teetering and liquidity drying up, unless liquidity comes back into the markets, this scenario here, moving up, isn't going to happen. It will only happen if liquidity comes back into the markets. If everything stays as is and liquidity keeps draining out of the markets, then we're going to have this break. So what is our trade? A trade is a break of this channel line. A close below it would be a trade from here to here. And a break above this level right here would be a trade from here to here. And that's really what we're looking for. We are in what's known as an accumulation phase right now. So no one knows 100% of what it's going to do. I'm neither bearish nor bullish, But all I'm looking at is what the markets are saying right now. And what they're saying is there is a serious lack of liquidity. And generally speaking, if that does not change, what that means is we're going to head further to the downside. So if I'm going to pick based upon the data that's out there right now, I would say this is going to break to the downside unless a change happens and we push higher. So let's leave it at that, but that's where the trade is at. One of those two breaks. We're in accumulation right now. So keep your eyes peeled on this for a change in direction according to what we've just talked about. Next, we're going to look at dollar here. Last week, we were reviewing dollar. We said that it had a very good chance of breaking out, and it did so. It closed above this channel line. Now, where does dollar go to? We expect dollar to head on up. Maybe it doesn't reach there all the way this week. We may get something like up and then down and then up, but we expect dollar to go right up in here, and that sits about 106. We're just going to call it 106, but dollar is now heading to 106, and that's what we're looking at to trade to that move to the upside. Let's look at pound yen. Now, pound yen has pulled back here and has been steadily moving up. It pulled back again. We're looking for this to move to a target this week of about right here. Hopefully it gets up there this week. We get a strong push, but we're looking about 89. We're just going to call it 189 and some change, okay? But we're looking for the pound yen to move up there. Why is that? Because we expect, because of the dollar push out, for the yen to become very weak. Even though the pound is one of the baskets of currencies in the dollar, we expect the yen to become much weaker and push out this way to the upside against the pound. Now you can imagine, if we're thinking about this for pound yen, which may be a little choppy, you can expect a very strong straight move in dollar yen. And the dollar yen we expect to go up this week as well. And I will look at that next right now. Here we see dollar yen, and what we are looking for, again, you can see that channel line. We're looking for a push up to this channel line right here. Now that's going to come probably around the 149 area is what we're going to call it. We're going to maybe hit some more consolidation here, but once we break that resistance line, we expect to gradually move on up there. Hopefully we get there this week. Long-term target in dollar yen is clear up there, but we have quite a ways to go before we hit that. Probably we may even come down here, move around, even maybe come down and hit the bottom of this again before moving up to there. I don't know, but in any case, that would be our long-term target. But this is our weekly target of right up there, about 149 is what we're looking at on dollar yen. Next, we're going to look at gold here. So last week, we said that gold was moving to a target of about 1848, 1850, down in that neighborhood. It's taken a little breather here and it's pulled back again. So you see it came down here, broke below support, but then had a reversal and came back up. We expect gold to at least go up to 1936. If it holds there and rolls back over, then we should get that break and eventually come down here and hit 1850, 1848. So we're looking for something like this. We're looking for a push up and then a rollover, and of course, bounce, a bounce, a bounce, and a push down. And that's what we're looking for on gold. Now, this weekend was Jackson Hole, and as you know, in Jackson Hole, that's where all the central bankers meet. And who's front and center? It's Fed Chairman Powell. And he came out and specifically said, hey, look, we're still seeing a heated real estate market. We think it's going up. We have seen some significant pullbacks in inflation, but not enough to justify us stopping raising rates. So what he was saying there is that we're still looking at, in the future, raising rates. We are holding, pausing, but not stopping. And so with this being understood, unless something radically changes in the next 6 months, which I believe it probably will. But during that time, we could see a rate hike at the next meeting. That's what he was projecting out there, that, hey, things have not cooled down enough. We've got these markets still heading to the top side. We've got housing expecting to grow 10% here in the next year. We've got all these things that tell us that inflation hasn't been tamped down enough for us. We need to see more carnage. So we're going to go ahead and raise rates more. If that is the case, then gold, when it goes up there and hits this level right here, either at this level at 1936, or it might push a little higher to about 1950 and it rolls over, gold is going to break this support and it's going to head on down here to 1850 to 1848. And that's what we are kind of looking at right now. We see that a channel has been currently in place for gold, and the bottom of that channel lies right here. And you can see that if gold comes down, let me straighten that out there so you can get a better picture of it. If gold comes down, it's, we have this target, but it could bounce there and continue down further, down to this support level, which lies about 1800. We'll see, but we need to break this level first, and that's where we would trade it. Or if you get a little bit more daring and it comes up here and starts to roll over, you can trade it there for bigger wins to the break and downside of here. That's a longer trade. That's a lot more than a week. This week we may just see it get up to here. Next week it may roll over. So this week we may continue to see an upside move to this level right here, that support resistant level at 1936. You can trade it there if you so feel inclined to do so. It definitely looks like it's going to push there first. But once it gets there and it starts to roll over, that's when you want to get out of that long and you want to look to go short gold. So we still have a bearish outlook on gold, simply due to the fact that the Fed is still bullish on raising rates. So with that being the case, gold would definitely head down. I'm going to do one more thing here before we close shop, just so we can kind of keep track of what's going on with the gold trade and so forth. But as we see here, we have reached on the 10-year the top level again, and we have rejected that. And we see that rejection right here in this strong bearish candle. We see a pullback, and it looks as though it's going to push down further. That's why we kind of have a bullish outlook this week in gold versus our major bear outlook. But still, with that being said, we need to hold certain levels here for a bearish outlook on gold. I just want to go through that with you. We have this channel that lines up or runs. We'll put the top channel up here first, and then we have a bottom channel which exists right down here. Now, if we come down and we get to this bottom channel and we hold that channel, meaning if we push down here, that's our bullish move in gold, and we hold here and we start to roll back up and we break this top here, that is our bearish move in gold. So a hold here and a push back up, gold starts to turn bearish. And that's what we're looking to see if happens. If this breaks, now it's a whole new ball game, and we could see a long bullish run in gold. But again, we're looking for something to pull back to here and bullish move in gold, and then a reversal and break and bearish move, simply because of the Fed sentiment of rates needing to go up more. And that's the reason behind that. So that's what we're looking at. Again, subscribe, like this channel. We can get it out to more people. They can get this information. They have opportunities given to them to know how to trade. Follow us. Click on our link below. Sign up for a free account. Come in for some free training. We do it every Wednesday. And it's something real exciting that you can get involved in, get some questions answered and so forth from some guys who have been in this business, combined experience over 40 years. So come on in and take a peek around, see what's there. And we look forward to seeing you there. We'll talk to you next week as the markets really start opening up because everyone's back from the Hamptons. We'll see you later.